This is the port of Rotterdam. Every day, ships arrive here carrying crude oil, car parts, and the clothes on your back. You would think once a ship owner pays for their vessel, they are free to sail. But here is a secret. Before entering almost any major port on Earth, they need a permission slip from a private insurance cartel, one that controls over 90% of the world's shipping tonnage from a handful of offices in London and New York. They do not own a single ship. But if they decide you are a risk, no major port will touch you. You are done. So why do the world's biggest shipping companies hand this much power to a private club? And what happens when that club gets used as a weapon? To understand this, we have to start with an uncomfortable truth about the invisible infrastructure that keeps global trade moving. When a massive container ship leaves Shanghai bound for Los Angeles, a lot of things can go wrong. The ship could collide with another vessel. It could spill oil across a coastline. A crew member could be seriously injured. Cargo could be lost at sea. And when any of those things happen, the bills are enormous. A single oil spill cleanup can cost over $1 billion. A major collision liability claim can run to hundreds of millions more. Regular insurance does not cover this. Standard marine hull insurance covers damage to the ship itself. But the really catastrophic stuff, third-party liability, environmental damage, crew injury, wreck removal, that falls under a completely different category called protection and indemnity insurance. It is commonly called P&I. P&I insurance is not sold by Lloyd's, by AIG, or by any commercial insurer you have heard of. It is provided almost entirely by a network of mutual clubs, organizations where ship owners pool their risk and collectively cover each other's losses. There are 13 such clubs operating globally. Together, they form the International Group of P&I Clubs, and together they cover over 90% of the world's ocean-going tonnage, roughly 2 billion gross tons of shipping. That's not a market, that's a monopoly. So how did 13 private clubs end up controlling the insurance backbone of a $14 trillion industry? The answer goes back to the 1800s, and it starts with a problem that commercial insurers simply refused to solve. In the mid-19th century, shipping was exploding. Steam power was replacing sail, ships were getting bigger, trade routes were multiplying, and the liability exposure that came with all of it, such as collisions, cargo damage, and crew claims, was unpredictable and potentially unlimited. Commercial insurers would not touch it. The numbers were too large, and the risks too hard to calculate. So ship owners did what industries do when the market fails them. They formed their own clubs. If you owned ships, you joined a mutual club, paid in your share, and in return, the club covered your liability claims. The bigger the club, the more it could absorb. By the early 20th century, these clubs had consolidated into a small number of powerful institutions. And by the 1970s, they formalized their cooperation into what we now call the International Group. The arrangement made sense. Catastrophic maritime losses are rare, but enormous. Pooling them across thousands of ship owners worldwide is the only way to make the math work. No single commercial insurer could absorb a $1 billion oil spill claim. But a pool covering 2 billion tons of shipping can. But here is what most people do not know. The moment you formalize that kind of pooling arrangement, you create something that looks a lot less like an insurance market and a lot more like a cartel. Here is where we need to give credit where it is due. The International Group is not some shadowy conspiracy. It operates openly. It is recognized by regulators in the UK, the EU, and the US. Its member clubs have been granted a specific antitrust exemption, a formal acknowledgement that the pooling arrangement is so essential to global trade that normal competition rules simply do not apply. Let that sink in. A private insurance cartel was handed an official exemption from antitrust law because the alternative, a fragmented, commercially driven P&I market, was considered too dangerous for global shipping. The 13 member clubs include names like the UK Club, the Guard Club based in Norway, the Steamship Mutual, and the Standard Club, Each covers a different slice of the global fleet. Some specialize in tankers, others in dry bulk carriers or container ships. Between them, they cover vessels from virtually every major shipping nation on Earth. The dominant player is the UK Club, one of the oldest and largest, covering over 200 million gross tons of shipping. Gard, based in Arendal, Norway, is the second largest, with a reputation for handling the most complex and high-value claims. Together, just these two clubs cover roughly a third of all insured tonnage globally. But here the story gets more complicated, because the international group does not just pool insurance, it also sets the terms of entry. And those terms have real teeth. To be covered by an international group club, a ship has to meet certain standards: flag state, safety record, age and condition, and management quality. If your vessel does not meet those standards, the club will not take you on. And if no international group club will cover you, you cannot get protection and indemnity insurance that major ports and banks recognize. Port state authorities in the US, Europe, and Asia require valid protection and indemnity insurance as a condition of entry. Banks require it as a condition of financing. Charterers require it before they will put cargo on your ship. So, a ship without international group coverage is not just uninsured. It is locked out of the entire global trading system. This is what makes the international group more powerful than most governments realize. They do not pass laws. They do not send inspectors. They simply decide whether you are insurable, and if you are not, the market locks you out automatically. The most dramatic example of this power came in 2022. When Russia invaded Ukraine, the international group clubs faced a stark decision about continuing to cover Russian-flagged vessels and vessels trading to Russian ports. As Western sanctions tightened, club coverage effectively became unavailable for large segments of Russian shipping. Overnight, dozens of vessels found themselves unable to call at European ports, unable to get letters of undertaking for their cargo, unable to function in the legitimate global market. No military action required, no formal embargo needed, just the withdrawal of a piece of paper. This is incredibly dangerous, because it revealed something the shipping world had quietly understood for decades but never said out loud. The international group had effectively become a tool of geopolitical enforcement, and nobody voted for that. Russia's response was to accelerate the development of what analysts now call the shadow fleet, older vessels often with opaque ownership structures, insured through non-international group providers such as Russian state insurer Ingostrak or smaller P&I clubs operating outside the group's framework. By 2024, estimates suggested the shadow fleet carrying Russian oil had grown to over 600 vessels. Some are well maintained, many are not. And this is where the system's internal contradiction becomes impossible to ignore. The international group was built to raise safety standards across global shipping. Its coverage requirements push ship owners toward newer vessels, better crews, and higher maintenance. But by using those same coverage mechanisms as a sanctions tool, it is pushing an entire segment of the global fleet underground, outside inspection regimes, outside safety standards, and outside the transparency the group was designed to create. In January 2024, the Pablo, a tanker carrying Russian oil, suffered a catastrophic fire in the Strait of Malacca. It burned for days. The vessel had no international group coverage. Cleanup costs and liability fell into a legal black hole. It was precisely the scenario the mutual club system was designed to prevent. So, what is next? The international group is not going anywhere. The pooling mechanism is too structurally necessary for commercial alternatives to replace it. But the shadow fleet problem is accelerating, and regulators are starting to ask harder questions about where the line is between safety enforcement and political weaponization. The European Union is pushing for greater transparency in club ownership and governance. The International Maritime Organization is developing new frameworks for verifying insurance coverage on vessels that fall outside traditional group membership. And a small number of Chinese-backed insurance entities are quietly building out capacity that could, over the next decade, offer an alternative protection and indemnity framework for fleets aligned with Beijing rather than London. If that alternative scales, the international group's monopoly fractures. Whether that makes global shipping safer or more dangerous is a question no one has a clear answer to. So, next time you see a container ship arriving at Rotterdam or Los Angeles, remember, that vessel isn't just carrying cargo. It's carrying a permission slip issued by a private club that most people have never heard of. And that permission slip is the invisible infrastructure holding the entire system together. That's modern maritime trade. Concentrated, consequential, and far more political than the shipping industry would ever admit. What do you think? Is the international group a necessary foundation for safe global trade? Or has it become too powerful for a private institution to hold? Let me know in the comments.